Hey there, and welcome to Money and You. I'm Michelle Perkins, your host. My search for more fulfilling work led me to career and business coaching, where I stumbled upon a game-changing discovery. Money issues often start with our mindset and habits. You see, our relationship with money is the key to overcoming those frustrating financial obstacles. As an entrepreneur, coach, and problem solver, I'm passionate about helping you create a great relationship with money. Because, turns out, that's the foundation for a limit-free life. Each week on Money and You, I speak with amazing guests about all things money, mindset, practical tips, and everything in between. We're here to give you new insights, education, and empowerment so money can be one of your favorite relationships. So join us for some lively conversations and let's transform your financial life together. Hello, and welcome to another episode of the Money and You Show. I'm Michelle Perkins, your host. And again, always excited to have great guests on this show. I don't know if you know this, but I speak to every guest ahead of time and I sort of vet them and make sure that they're going to be a great guest for my audience. And I really connected with today's guest, and he's talking about franchising, which may or may not be something that you're interested in at the moment, but I would really encourage you to listen because there's so much amazing uh, discussion about franchising, but also just general business advice and also wonderful tidbits around your relationship with money and how to really expand on your portfolio in a way that you may have never thought about. So, without further ado, I am going to introduce you to Scott Jones. And if you've wondered whether a franchise could be your path out of burnout and a way to diversify your business, you'll want to lean in. Scott Jones is a franchise consultant, multi-unit owner, and former franchise CEO with over 30 years in franchising. He's helped professionals and business owners evaluate and launch the right franchise so they can protect capital and build a business that fits them. Today, he shares how to research opportunities, spot red flags, and decide if franchising fits your goals. So, Scott, welcome.
Thank you, Michelle. It's good to be here.
Yeah, great to have you here. You are really a great person to talk to about this topic because your breadth of understanding and knowledge comes not only from helping, people find franchises and become franchise owners, but you've been a franchise owner. You want to give us a little background?
Sure. I have I've been in and around franchising for over 30 years. I don't want to give the exact because it really shows how old I am. But I've had so much different experience within franchising. As you mentioned, I've been a franchisee. I am a franchisee and operated at scale. In fact, my wife and we just signed franchise agreements to develop 5 locations of a new franchise. So, in the process of looking for our first site for that franchise, I was a senior executive for one of the largest franchises in the world and was able to see franchising through that viewpoint. And then I was the CEO of a company that provides support services to about 80,000 franchise locations. So, franchisee, franchisor, supplier. And then for about the last 20 years, 21 years now, I have been providing consulting to individuals that, some are exploring franchising or even business ownership for the first time. Others are very experienced franchise operators, business operators. They're trying to determine if diversifying is a right move. Just came off of a meeting with someone that has sold their business and had a substantial exit. And it's great to have an exit, but then what? Not only what do you do, but what do you do with the money? And so, a lot of those conversations. And I also consult with institutional groups, which gives me a view into what are they looking for? What do they look to buy? This most recent franchise that we acquired, well, I acquired that with an eye toward an institutional exit. I know that they will like this. So this kind of, just combination of experience allows me to look at franchising, I think maybe a little bit differently.
Yeah, absolutely. I mean, how could you not? You've got to really, I mean, you know it from the detailed minutia of it all the way up to the 30,000-foot view. So I love that, and that's why I'm really excited to have you on today. So, can you just speak to, some of the differences between just starting up a business and buying a franchise, and why in your mind franchising can be very appealing in that regard?
I and I should mention, not all of my businesses are franchises. So I really look at this through a pretty simple lens, and that is, where will my superior return on investment and return on time come? And so when I make a decision to go the franchise route rather than doing it on my own, what I'm really doing is I'm trying to accelerate all of the good things that we want to happen. How long does it take to get open? How long does it take to hit that, productive break even? And then, of course, ultimately, where is the better return? And I think that's really the function of a franchise. You do not have to create the game plan, you've got to execute upon it. And then we can talk, maybe more later. There's a lot out there in franchising. There's north of 4,000 franchise brands. In fact, I heard the other day that it is actually now over 6,000 unique franchise brands. And so I'm starting to hear that number. And a lot of those are little small franchises that you'll never hear of. But there's a lot of inequality in the quality of franchises that are out there. So, uh, speed to break even, speed to open, upside opportunity, and really what we're looking for is a strong leadership team. They understand the business that they're in, and more importantly, they know how to take somebody that, in many cases, they've never owned a business, or if they have, maybe they've never been in that industry. So, how do you take somebody without that experience, stand them up in business, and help them really do more than what they could do on their own? And if a franchise can't pass that simple test, it's not the right thing.
Right, right. One of the things that comes to my mind when I think about having a franchise versus starting something up is the franchise offers the systems and the processes already set up. So it feels to me, and I haven't owned one, so what do I know? But that you could bring in a team, and if you're an effective enough manager or leader, you would be able to put people in place much quicker than the average entrepreneur who's been involved in everything and has trouble letting go, and all of those things that entrepreneurs deal with when they're trying to build a team. Is that correct?
Yeah, I think it's a great point. So, going back to these systems and processes that the franchisor should be bringing. So, the franchise that I just mentioned, that we're opening, that is actually a perfect illustration. The job description for what the general manager looks like, that's in place. The tasks and duties and strategies that GM needs to satisfy on a, daily, weekly, monthly basis, all of that's in place. I don't have to create all of that. Now, I have to hire the right person, and there's assistance with that. going back to sometimes no experience in the industry, some franchises will actually get involved in helping you maybe with a final interview, certainly with the profile of what that manager or the different employees need to look like. So all of that is already framed out. I'll need to execute. We still have to manage them and do all of the things that requires, really running a business. But I don't have to create any of that. What you're talking about too a little bit is, and this is much of what I do because many that I work with, they're executive level, C-suite, own other businesses, and so they're unable to spend full time on that business. And you'll hear different labels: semi-absentee, semi-passive, manager run, but however the label, the premise is I cannot spend all of my time on that. I don't think there really is a true absentee franchise, certainly not at the beginning, but that semi-passive, absolutely. And that ability to be able to come in, bring in the right person, follow the structure that's already outlined, again, that accelerates how quickly I'll be able to get open and to get to the part that matters. I was talking earlier today with somebody, and I said this is the most uncomfortable part when you're opening a business. All the money's going the wrong way. You know, I like it when it starts coming back. So everything that I do is geared toward getting the business open, getting the cash flow started.
And can a good, pretty solid franchise brand, can they accurately predict, if you do things correctly, when you'll start to see that return? Or
Yes, and probably even more importantly, part of what you want to do when you are evaluating a franchise is talk to existing franchisees. And so
Mhm.
it's not just the franchisor saying, well, this is what can happen. It's talking with them and finding out what actually has. And when I validate, you'll hear the term validation or talk with existing operators, that gives me an opportunity to hear from them all of what we're talking about. How is the initial training, the ongoing support, the systems and processes that we're talking about, the technology that they use? And then ultimately, how long does it hit to take or to hit these different mile markers? And that's where I think in franchising, there's so much transparency that is available. I am always a little bit surprised that there are some that they fall in love with the widget and maybe don't do the level of homework that they should, and too much assumption. So much of what I coach to is just being very deliberate in the diligence process. But that opportunity to speak with existing operators will allow you to understand in very real terms how long it does take to hit all of the different mile markers that are important.
Yeah. Yeah, it's so interesting. I think about this, and I guess I haven't really thought about it the way you're thinking about it. I think you're thinking about it in a really smart way. I was always thinking people would be attracted to a franchise because they were offering a product or a service that they had an interest in. They love helping people, so they want to have a home care, business for seniors. And I wonder if the general population is looking at it like you are. What do you see out there?
Everybody's wired a little bit differently, and I don't know that there's necessarily a right or a wrong, but You nailed it. This is something that we talk about quite a bit in the early stage. What what I do, and anybody could do this, is I build a model of what would the ideal business look like for whoever it is I'm working with. And we talk about passion and what really is most important. Where I very often hear specific businesses. I would like to be in a business that deals with seniors or a golf business or pickleball or whatever, right?
Yeah.
Um,
Do those exist, by the way? Pickleball franchises?
yeah, there are pickleball franchises. Most of them are pretty expensive because they're building food and everything else. But the key and where I take this back to, what are the goals and objectives that this business needs to help you meet to where it actually works? And it's really interesting. I've been doing this, as I said, for 21 years. I've had hundreds of these conversations. And very often they are coming in saying, well, I'd like this business or that type of business. But when we start really talking about what are their short term goals, what are their mid, long term goals, I never hear any reference to a particular type of business. And and so I'll point that out, and it is kind of an epiphany for them, and that's where we can have that conversation. What matters more, this or that? Just had this very accomplished executive, C-suite, large company, and came in asking about a golf business. As we got more into the conversation, he came back and said, I don't think a golf business is actually going to work. I knew that well before he did, but I, gave him the tools to sort that out. So uh, everything is situational. I've got a couple right now that I'm working with that financially they've met their goals. So this really is more of a lifestyle choice for them. And that's where I say, every situation is different. Everybody is wired a little bit differently, but probably the best advice that I can offer as you're looking at how are you going to measure any potential opportunity. And in most situations, the opportunity isn't limited to just a franchise. Maybe I buy a franchise. Maybe I buy an independent business. Maybe I take a different job. Well, how are you going to measure whatever it is you're looking at? And the more clarity you have in how you're going to do that, the easier it is to recognize what that right solution is. And so spend time up front really considering what does matter the most. That's an important part of this. And the other, I think, very important part is where can you give yourself a running head start? What skill sets, not industry knowledge, skill sets do you have that could be leveraged into whatever you do next? Leadership skills, sales skills, operational, project management, whatever it is. So, goals, objectives, what are you already good at that, as I said, can give you an advantage going in? And if it's a good franchise, by the way, it is not a situation of, I have money and I'd like to buy this. They will be looking at you as carefully as you're looking at them.
Mhm.
Very much a mutual evaluation. I tell everybody that, and I think maybe half believe it. Now, I'm talking about the really good ones. There are some franchises out there, if you can stroke a check, you're in.
Yeah.
That's not what you're after.
Yeah. So what are they looking for in a franchise owner overall? Is it financial understanding? What is it?
Um, it that will come back to the particular franchise. There are some, and mostly food, the Paneras, those sorts of things, where they require that you already have multiple unit experience in that industry. Outside of that, it's usually not the specific industry knowledge. The franchise that I'm going into, they're looking for those that have led teams. They know how to build a team, they know how to build culture, they have a basic understanding financial literacy. And there's a lot of people, by the way, that don't have that, that haven't been involved. And again, some that are highly accomplished. It just hasn't been a part of what they do. And so it's not a high bar, and you can learn, anybody can learn that part of it. But those are the sorts of skills. Now, if it's a business that I'm going to be more involved in, well, now we're really looking at, can you manage the type of employee that you'll have? White collar, blue collar trades. Uh, Maybe at the beginning, let's take a service oriented type of business. You mentioned home care. It could be home care. Think anything that goes into a home: flooring, window coverings, insulation, decks, roofing, cleaning. Well, even in those simple examples, there's some differences. If I own a home cleaning franchise, I'm not cleaning the house, or if I am, I'm doing the wrong thing because I'm not building, the business. Um, but I'm also not, I'm not going to need 50 employees. Over time, if I can build three or four crews of, two or three people, I can have a great business. So, do I understand how to deliver an exceptional customer experience? And we can take and apply that. So, those are the sorts of alignment that the franchisor is really looking for. It's really unusual if I'm working from some with somebody that has done well in corporate, where whatever franchise we're looking at is more complicated than what they're already doing. Y- y- Yeah, they've already done or had success in a job that is more complicated than the franchise. What changes, and it changes everything, is now it's all my money.
Hmm. Hmm.
And the difference that makes in the fear and anxiety is remarkable.
Have you ever had a money or career question you really wanted to ask, but didn't know who to go to or just felt uncomfortable even bringing it up? You're not alone. Talking about money can feel intimidating, even scary. And that's exactly what I'm trying to change. That's why I created a free virtual coffee chat, a casual, no pressure 20-minute conversation where you can bring one thing you're wrestling with and we'll talk it through. No judgment, no jargon, no sales pitch, just clarity, ease, and a real answer from someone who gets it. If you've got something on your mind, don't sit in the confusion. Book a spot at limitfreelife.com and let's sip and sort it out. Yeah, let's go there because that really speaks to what I like to talk about a lot, which is your relationship with money. So, if you are used to sort of, the classic traditional job with a regular paycheck and benefits and all of that good stuff, and you move into this arena, what have you seen, and what do you advise people to, how much should they have in available resources and things like that?
I think there's a general perception that franchises are a lot more expensive than they really are.
Yeah.
So, if I were to break franchising into two broad categories, those that have brick and mortar and those that do not. You know, we're going to go to them. And that could be, business to consumer or business to business, either one. Let's take first that service or that territory based franchises. Um, you heard me say earlier, there's thousands of franchises. So in these territory based franchises, again, there's thousands of them. If I were to look at where's that sweet spot where the day to day activity takes place, total all in investment, 75 to about 150,000. If it is a franchise that has some sort of brick and mortar, and it could be retail, it could be food, it could be automotive, a gym, whatever, physical brick and mortar. The sweet spot in that range, and this will vary a little bit by market, but in that, and this is a wider range, but say 300 to 800,000. Are there franchises that are more than that? Of course. Are there some that are way more, a little less, way more, but the day-to-day activity, that 300 to $800,000 range. General rule of thumb, you need about 20% of your own money in the deal, 20, maybe 30%. And then behind that, SBA loans, leased equipment, leverage of different types. And when you're looking at the franchise or you're working with somebody like me, they should be able to introduce you to banks that like the deal. And in most situations, the business doesn't need to qualify for the SBA loan. The individual does. You've got to have the right credit score, those sorts of things. But if you do, there's an SBA directory. And any franchise that is on that SBA directory, well, SBA will lend to them as long as the borrower is credit worthy. So as I said, it's not as much as what people think. I hear all the time, well, they're $2-3 million. Some of them are, but that's not where we see most of the activity. One final thing on this, and I think it's counterintuitive. After all these years that I've been in franchising, I do not believe there's a direct correlation to the total investment and the total financial upside in the business. I see franchises that are 150,000 all in that financially outperform franchises that are a $3 million investment.
Wow.
So what I mentioned before, the quality of your franchise partner, that franchise that you're buying into, is everything.
Really interesting information. And what are those qualities? What makes for a good franchise partner?
Some of what I was talking about before. I look at the leadership team.
Hmm.
Do they know franchising? Do they know how to take somebody and help them make money in that franchise? And that's not always the same thing.
Yeah.
I make the best chicken wing in the world. And I see this all the time. They're friends and family. You've got to franchise this. It's fantastic. It probably is. But making a great chicken wing and taking somebody that doesn't know how to make a great chicken wing and help them make money, those are two different businesses. So the leadership team. And then I'm looking at the depth of the systems and processes that they do have. If it is a franchise that has been operating, well, now we're looking at what have they demonstrated? The franchisees that are in the business. You'll see, I return to the same things over and over because there are certain fundamentals that don't change. Do they understand the business? Do they have systems and processes? Can they validate? Well, their franchisees say, yes, this is a good business. I get treated well. The support is strong. I'm happy. with the financial returns that I'm making. I'm happy with the quality of life. So those fundamentals never change. I don't care what type of
Mhm.
business we're looking at.
Yeah. Interesting. I just had a flashback to a smoothie company. It no longer exists, and it was a franchise. And I remember speaking with the owner, and I think she was trying to get out of it, but she was talking about how whatever the franchise or whoever that was sort of just all of a sudden just abandoned them, and there was no more help and no more marketing to speak of. And so it just was a real problem, obviously. Uh,
I I get this because people that know what I do, they'll have
yeah.
a friend that didn't really do the homework that they should have up front. Now they're in a business and things are not going the way that they expected. Well, call Scott, he can help you. It's very difficult, in many cases to help somebody out of a deal they should never have gotten into. I can help a lot more upfront than I can on the back end. I try. But, yes, in a situation like that, it's difficult to get surprised if you do the work that you should do before you make the decision. And that work goes all the way back to what I was talking about earlier on how are you measuring whatever it is you're going to do, and then very deliberately going through and proving that whatever business or opportunity that you're looking at gives you your best chance at satisfying the goals and objectives that you have. So there's this circular, but that's where the safety really is thinking through things and then proving them. I even get this. I'll have all these conversations with somebody. We'll go out, do some research, identify short list of some good strong franchises that meet their particular requirements. We'll talk through them, and then 3 hours later, I'll get a call or an email. This is it. You know, Absolutely, and my response is always the same. That's great. Now let's spend some time proving it. And sometimes that initial gut is exactly right. And other times, as they really learn more about the business, they recognize that, well, maybe it's not exactly what they thought. There were some perceptions there that weren't accurate, or very often a company that maybe on the surface it's not as interesting, but the fundamentals of that business better support the objectives that they're trying to meet. So I see this play out
Yeah.
every day.
Yeah, I think that's so interesting because it's really, well, for one thing, all that preparation is really, really important. And, everything from understanding yourself to understanding the business to, and being able to really do your homework. It also, what you're talking about throughout this discussion is the perspective you take on getting into it. And I could see where people, need to be in the right state of mind to make a good choice. If you're losing your job and you're sort of like, this is what I want to do for the rest of my life, I want to make sandwiches and not think about, I could see where your emotions could take you into something that wasn't necessarily the best business choice.
You mentioned earlier just the relationship we have with money.
Mhm.
And when emotion comes into it, that's where mistakes are made.
Yeah.
And
Yep.
so everything that can be done to remove emotion, remove gut, these, instinctual things that we do that may or may not be right. And what is interesting is I can have somebody that is, as I said, very accomplished, uh, involved in billion-dollar transactions in the corporate world. And now we're talking about something with a lot fewer zeros involved, you know, but it's all their money. And I've got to remind them, use the same discipline. Do the same level of due diligence for yourself that you will do for your company that you work for. I'm working with a couple of private equity groups right now, and you would think, and I'm not saying that either of these two, I got to qualify that, but you would think that institutional groups are always very logical. They're not. Because we bring in certain biases. I thinking of one in particular where they were very eager, to go after this one particular business, and it was at such odds with the requirements that they had given me. And so I let this play out for a little while, and then I started trying to bring it back, in, and they figured it out, and ended up, making a different acquisition. But the emotion that goes along with making significant decisions, the more that that can be regulated, the more that that can be directed toward the outcome that's trying to be driven. And I think a lot of times, and I get this all the time, when we start talking about franchising, people think a small business. And sure, they can be. Um, I'll get somebody, they've had a great career. They're not ready to retire, but they also don't want to have a lot of employees and, occasionally just, what can I do help by myself? There are franchises for that. I'll get others that, they're ultra high net worth, or they've had a nine-figure exit. There are, well, if private equity is as active in franchising as they are, and I'm not talking about just acquiring franchises, but franchisees, unit level, when private equity is active as they are, that is a good demonstration that this is an asset class. And that is, by the way, how I view franchising. From my perspective, it's a financial asset class. And when I start making decisions on where am I going to invest my money and my time, everything that you talk about, the different financial asset classes, whether it's real estate or whatever, this for many should be part of that discussion because there are a lot of situations where it is the superior choice. And so, for anybody that is in a situation right now where, and we've talked about a number of things, you're in some sort of a life transition, or it is just what is going to be the best financial decision, the best financial investment,
Right.
you should take a look at franchising.
Yeah, I think that perspective on it is so interesting because, it is it is a way to create work and it is a career choice, but it is very much an investment choice as well. And I kind of love that you've addressed it from that vantage point. It's different. The other thing that is unique about you is how you've been able to scale in this world. And we've not too much time, unfortunately, to talk about this, but I would love for you to touch on that because not everybody wants that, and that's fine. But if that is a goal, because that's where some big investment returns can be found, what are some of the keys to that? What should you be thinking about?
Yeah, it's such a good question. And there is opportunity to build a large enterprise, and there are different ways to scale. Earlier I talked about the two, broad categories: brick and mortar, territory based. You can scale either way. In brick and mortar, pick a category. We did very well in fitness, wellness, big box gyms, boutique. So there it is really coming in and doing what's called an area development agreement, which gives you the opportunity to open multiple locations in a defined geographic area. And that can be in one particular market, it can be in multiple states. That can be accomplished up front, or you can come back and add more later as long as there's more to add. There are franchises right now where there are franchisees that have partnered with private equity and they're doing a roll up within that franchise, and they'll accumulate 100, 200 units. That's building substantial enterprise value. A territory based business. There's a they're in my front yard right now. So they're a lawn care franchise. For the last many years, they've been the ones that fertilize our yard and do all of that stuff. This franchisee operates 70, 80 trucks. It's a multi-million dollar business at a very high margin. And if the day comes where they choose to sell that, they will be able to sell that to an institutional group at a very healthy multiple. So it can take different shapes. So you can scale within a brand. You can also scale within a brand and diversify into multiple brands. And that's the strategy that we took. So over time, multiple units within a particular franchise, and then we continued to add different franchises. There's no right or wrong way to do that. Some will diversify and kind of stay within a same or similar industry. I was more of the mindset I didn't want all my eggs in one basket type of thing. And so we had different sorts of business services, home services, the fitness, the wellness. So we were in a lot of different types of franchises, but it was an intentional choice. And I could go on and on with this, but you can build an infrastructure. And once you've got that infrastructure established, it's easier to
Yeah.
add other businesses because I've got a team. So uh, you can go anywhere from I want two of something up to I want hundreds.
And well, and what is considered, some level of having scaled? Is it 3? Is it, I mean,
Yeah. You'll hear, vernacular in a franchise has a 3-pack, a five
yeah.
pack. Well, that means that franchisee has the development rights for 3 units.
Okay.
And I think this is maybe an important distinction too. So the franchise that I have a 5-pack, a 5-unit development, I don't open up 5 at once. I open up
Mhm.
one, and
Mhm.
then there's an agreed upon development schedule where we'll
Yeah.
open up the remaining 4. That is most franchises. One of my sons is a franchisee in a territory based franchise. He has 4 territories. Well, when he opened, he had 4 territories. It just gave him more geography that he is in control of and can sell into. So there's a difference between brick and mortar and territory. And the trade-off, and this is a question that I get a lot. Let's say I am considering a franchise. I can do one, or I can secure the development rights for one or three. Um, for simple math, let's say that the initial franchise fee for one is $50,000. Usually, and you pick the right number, once you get to about three, the franchisor, not always, but more common than not, will offer some sort of a discount on that initial franchise fee.
Hmm.
So if a single is 50, three units might be 120,000 for the
Hmm.
initial franchise fee.
Okay.
That's nice. Is that the reason that somebody should do more than one? No. Really what it comes down to is control. Now I control that market and I
Mhm.
have the right to, and I'm not compelled to, but I have the
Oh,
right to open up the additional two locations, with that agreed development schedule. And where that can become important is if it's a fast growing franchise. If
mhm.
I don't do that, I probably won't have the opportunity to come back later and add it.
Yeah. This is so interesting. You're a really compelling speaker around this topic, and you clearly know. I mean, we could talk for hours. I'd love to go into the brick and mortar, and I have a million questions about that. But I'd just love for you to let listeners know how they can connect with you if you want to be connected with. You
Yes.
sound very busy, so
No, yeah, thank you. And absolutely, anybody that even just has a questions, this is why I provide the consulting. There's so much question out there about franchising. So if it's something as simple as you have a question to maybe this is something you want to explore, reach out to me. My website is franchiseguidegroup.com, franchiseguidegroup.com. So you can connect with me there or Scott at franchiseguidegroup.com. You can find me on LinkedIn, any of those. And Michelle, if you can maybe put that in the show notes. And
absolutely.
yeah, but I'm more than happy to visit with any of your audience. And in fact, there is a special landing page
Oh, thank you.
just for you and anybody that comes in. There's a special assessment and a white paper and some things that are available just for your audience.
Thank you so much. That's really generous, and I'll definitely let people know about it. And yeah, I Scott, thank you so much. It's been really great. I think it's so interesting because as you were talking, I'm like, I don't think your financial planner is going to look at your long-term strategy and say, "Hey, talk to Scott about franchising." But
Right.
it is something that can be part of your overall financial future strategy. And so this is great. So people, have this as an option. And I find it fascinating, actually.
Yeah, oh, yeah, thank you. Yeah, and it is interesting. Once financial planners, wealth managers do better understand it, I very often get referrals from them.
Mm, okay, good. Yeah. No, that's great. And really, you're just a wealth of knowledge. So I would really encourage anyone listening who has any interest in this topic for any reason. I think that discussion would be really enlightening. So it has been to me. So thank
Thank you
you.
so much. I really do appreciate you having me on.
Yeah, no, it was my pleasure. And yeah, I look forward to staying connected with you. So
Okay,
thank you so
awesome.
much.
Thank you.
Okay, take care. And audience, thank you so much for being here with us on the Money and You show. We love it when you watch, and we really appreciate it if you subscribe or rate the show. Please share this episode with a friend who might be interested in learning a little bit more on this topic. And yeah, you can reach out to me at Michelle, two L's, at limitfreelife.com. And you can find me at the limitfreelife.com website. And yeah, thank you so much. We'll see you next week.